Hello and welcome to this Fireside chat with Stendörren CEO Inga. My name is Victor Stenloff and I'm an equity research analyst here at ABGSC covering the real estate sector. So Stendörren is a Swedish listed company in the real estate sector focusing on the segments of light industry, warehouse and logistics. The core of their operations are in the Stockholm area, but in the past couple of years have also expanded outside of Sweden. Today in this conversation, we're going to cover a few different topics from operations to financing and valuations, and then looking a little bit at Stendörren's future as well. But before our conversation, maybe you'd like to kick us off with a quick introduction to Stendörren about your history, your operations, and a bit about your future as well.
Yeah, well, Stendörren was founded in 2014 and listed on the First North when a property portfolio was carved out from another property company. And from the very beginning, the focus has been light industrial, warehouse and logistics assets. And as you said, the focus is on properties in Stockholm region. One third of the properties are in the Stockholm municipality, 1/3 in the greater Stockholm region, and 1/3 in the Mälardalen region. And for those who do not speak sort of Swedish or are familiar with that expression, is the greater Stockholm region. We have properties of about 12.5 billion SEK. Fairly high-yielding segment, obviously. Long leases, remaining lease tenure is 3.8 years. So I think that's in brief the summary. Yeah. I think commercially, what I see Stendörren is that we are, you could say, a derivative of a few macro trends. One is urbanization. We are obviously in Stockholm, which is a growth engine of Sweden, population growth, economic growth. Another macro trend is e-commerce, of course, and we build logistics properties for such companies. So I think that is, in brief, Stendörren.
Very good. So turning first to operations, I think 2 years ago, you had an occupancy rate of about 87% or so. Since then, you've made occupancy a key priority. And in the 2 years since, you've increased occupancy to 95%. So that's a very big delta in a very short period of time. I don't think many other companies that we cover has managed to do. So that's obviously impressive. But it also leaves you with some difficult comps. So how do you think the market should be thinking about occupancy rates going forward? Are we peaking at 95, and what will you do to keep them increasing?
Well, I guess there is such a thing as a steady state occupancy, which is probably around 95% on one hand. However, there is a sort of the concept of sticky vacancy, i.e. is the remaining 5%, so to say, the difficult areas. And that is not the case. We have quite attractive and good areas still to let. So I think there is a potential to improve it further on one hand, but tenants tend to leave also now and then. So it's roughly now around 95%, but we still have good, sort of left space to let.
Yeah. And so flipping the coin then, that remaining smaller share of vacancies, is that due to some specific problem properties, or is it a trickle of smaller vacancies throughout the portfolio?
It is spread around. It's not. I guess there's always concentration as a result of a large tenant having moved. But no, it's spread around, and we have an idea and a business plans for each property that deals with that. So there's a way forward on all of those.
Very good. So in the past, you've managed to sustain pretty high rent increases when you've renegotiated leases with tenants. Looking forward, do you think we'll be able to see the same sort of acceleration of rent increases, or do you think they'll plateau and decelerate over time?
Well, the figures that you are referring to, excuse me, is that we, upon renegotiation of leases, tend to increase the rents with 20 to 25%. That has been the case continuously, even though we did increase as a result of inflation. Basically all leases are inflation adjusted, so we did increase the the rent just going from 2022 to 2023 with some 10%. Nonetheless, we managed to, during the first half year this year, on top of that, so to say, increase the rent with more than 20%, the renegotiated leases. I think the consequence of inflation does not necessarily put the pressure on the potential on renegotiation of leases. But again, we have a business environment that is getting, in general, a little tougher. We have also, our tenants are facing energy prices coming up, and also obviously interest rates. So as a result of that, potentially slightly lower. But it is really, let's say, a key part of the investment case of Stendörren. We have our logistics, light industrial, warehouse asset in growing macro Stockholm region and in urban micro location in many cases. I mean, 1/3 is in the Stockholm municipality. There you have a scarcity of land. There is also sometimes a conversion of use from industrial areas into residential areas, just as Hammarby Sjöstad was once Lugnäs industriområde. So that gives an underlying growth potential in the rent, which is long term. So I think it's sustainable. Then obviously it may vary depending on the business cycle.
Interesting. So obviously turning a bit more into discussion about financing, and obviously this is a very hot topic at the moment, right? You've got 2 bonds outstanding.
Actually 3, including the hybrid bond.
Exactly, exactly. We'll come to the hybrid in just a minute, but talking first about the 2 regular bonds. One maturing in the first half of next year and one in the second half of 25. What's your thinking on refinancing those bonds versus trading them in for bank debt?
Well, I think the entire real estate sector needs to go into a, let's say, continuous deleverage over time, as we have no reason to believe that the interest rates will substantially come down to at least the levels of 3-4 years ago. We have, the first one maturing that you mentioned is 700 million SEK, and we, as a coincidence, have around 700 million SEK in cash position, including committed and available revolving credit facilities. So we have capacity to deal with it one way or the other. But we're a listed company, so I do not want to say more than that. But over time, obviously, the nowadays very expensive capital market-based financing must be decreased as a proportion of the balance sheet. That goes for, I think, all listed companies.
And I think we'll get into a little bit of discussion about bank debt and your relation with the banks. But as you mentioned, the hybrid. In the spring of this year, you bought back part of your hybrid. What's your thinking on these kind of equity-like instruments in the balance sheet going forward? Is that something that you want to keep? Or something that you want to get rid of?
Well, I think that I usually have the view that, and I'm conservative in this respect, that from time to time the capital market-based financing is attractive. Some from time to time is not. It's also subject to refinancing risk. So what I see is that we shall have a cash position / available under RCFs, which correspond reasonably with the next maturity of a capital market-based financing, to have that sort of safety belt, safety net, and if not used for that, partly for expansion. So I don't know if that was the answer to your question, because I don't remember the question.
Well, it's just about whether, obviously, because you have the hybrid, and it was a choice at some point.
No, but we want to remain in the capital market.
Yes.
So that's a straight answer to the question, and opportunistically and selectively to have an extra sort of piece of source of financing. But to a smaller extent, as a pure consequence of the fact that the pricing is high right now, as compared to for a while ago.
And so I suppose my question came out of the fact that you bought back part of it earlier this year. And so if you're not looking to buy back the rest of it before maturity, at least?
I mean, we are businessmen also. Even when we try to be long-term, we're also opportunistic in the sense that if there is a good deal on the table, we tend to want to do it. But no, we obviously have the next maturity of 700 in mid next year. So any let's say capital market initiative would rather be focusing on that.
Understood. Understood. So turning to bank debt instead, you've got about 70% of your debt held by banks. How's that relationship? I think that's interesting for us that obviously watch the sector, and for everyone that's interested in real estate stocks at the moment, how that relationship between the real estate companies and the banks are evolving. How's your relationship with the banks evolving at this?
Well, I think it's key to have good bank relationship, and I used to be a banker myself, and I understand the importance of the relationship aspect of having a bank. So I think we have very good bank relationship. We have expanded the number of banks that we worked with. We did that for, I think, 1.5 years ago. I think the bank are there when we want to put more leverage on I mean, as you have mentioned yourself, we have decreased vacancy. We have also worked a lot with the cost, so the surplus ratio has gone up. So consequently, the net operating income has increased, and the source, the prime source of capital for us over the last couple of years has been bank debt, where we put leverage, more leverage, so to say, on, or the same leverage on an increasing cash flow, if you want. So the bank they have continuously provided us with more capital.
And do you think, based on those discussions and that relationship now, do you think that they would be happy to also have you trade in those bonds for bank debt instead? And secondly, do you have a sense of what your bank lending margins would be in the future?
Well, some part of answering that question is referring to the Q2, where we increased our cash position. What I'm trying to say is that we already had that discussion. We expanded the debt volume and what's available under RCFs in Q2. So that's why we have the cash position of 700. So the answer is yes, they did do that. And the second question was about the margins. Yes. We have about this, I mean, margins have increased, but clearly the margin depends on the tenor exponentially. So what we basically have the same margins, but shorter tenors. But then there are a few tools in the toolbox that you can work with to mitigate that, such as extension options, which you can exercise early through the tenor to push maturity further away, so it doesn't come short too early, so to say, on the tenor of the loans. So we have about the same margins actually for our bank finance that we refinanced during the first half year of this year. Okay.
And for a final question on the financing side, I'd like to get a bit esoteric and philosophical. Not something that you usually do at investment banks or in these kind of discussions, but given that interest rates are now somewhere completely different from where they have been in the past years, right? How does that change the business model and the right amount of leverage or LTV for a company like Stendörren? And what's your thinking on that issue?
Well, we have around 50% loan to value, and that has decreased continuously over the last couple of years. I think the right measure of leverage should rather be ICR, and we had 2.3 in the first half of this year. I think that's about where it should be. I know if you compare to the European sector, that listed real estate sector, that leverage is lower. And I think since the capital markets are becoming more, let's say, international or European, I think we have to continuously sort of be aligned with that. But 50% is a reasonable level, and ICR well above 2 is also reasonable. So no drama there. But then obviously we did. I mean, the net operating income increased 25% half of this year compared to the previous half of the year. So we have to also measure, when you talk about the leverage and the capital structure, we have to realize that cash flow in the listed companies, the operational cash flow has actually increased quite a lot and will continue to do as we still have an inflation during 2023. And then you have an underlying amortization in the at least bank debt structures of, let's say, 2%, just to make an assumption. So there is a deleverage going on, which is quite substantial.
So turning now to the sort of last segment of this conversation, I think we should turn maybe a little bit to the projects. So those of us who follow Stendörren know that your largest tenant, Coop, are thinking about moving on to new premises, vacating one of your largest properties. What's the most recent development on that issue? And then I'll have a few follow-ups.
Well, they will leave, and the contract with Coop matures September next year, 2024, and they represent 9% of the sort of rent in the company. So, you know, if we have 5% vacancy now, so we're talking about like 14 at the, you know, when we get there, probably. The fact that Coop is moving out is we've known that for quite a while. So we have been working with the property quite a lot. It's a huge property. It's one of the largest in Sweden. It's 100 with actually two properties. One is around 100,000 square meter, and one is 30,000 square meter roughly. So it's 130,000 all in all. So it's a chunky piece. It's in the proximity of Stockholm. It's just 25 minutes with car. So it's an excellent location. It has a railroad actually going in. Actually, divides into three going into the property. So it's very close to Stockholm, 25 minutes. It has railroad, which is a very strong selling point. We have continuously been working on how to divide the property, so we can let obviously the largest property to one tenant and then the smaller to another tenant. We can also divide it all in all into 8 different premises. It has loading docks all around, so it's fairly easy to divide. It's not very modern, so it has a ceiling height of 9-10 meters, which is not modern standard, but all logistics operators and tenants do not need modern logistics. So it's an attractive location. It has railroad. It's a fairly attractive price per square meter. So it's and we are showing it to tenants, prospective tenants, regularly, not one or two, but regularly. So there is a clear market interest. So that the very short answer is we will let it, and I am confident that there is a market appetite for it. But it's a large volume, so it will take time. But there is a market interest from tenants. We have sent offers to tenants and been discussing different alternatives. So there's a clear strategy going forward on that asset, and we're confident that we will let it.
Do you have a sense of whether it's more likely to be one big tenant or many smaller ones?
Well, we have had several discussions with tenants for the entire property. So I'm probably a little bit surprised that we have had such a number of discussions. It's not a huge number, but it's a handful of discussion on tenants who wants to sort of rent the entire properties, and that makes me optimistic. But then we can, I'll say we can divide it in up to 8 different premises and anything there between from 1 to 8 if you want. So we have a very flexible strategy when we take it to the market. So it can be, one very large and then 2 small ones, just as an example. And so the smallest then being 10,000 square meters.
I think last time you were here, you showed us an image of how you could divide the property potentially, showing those. I don't remember if it was 8 or maybe even a larger number of subsections. But given that option of subdividing it up into 8 different lets, what would the capex be for that sort of transition? You mentioned also that it's not the most modern facility, and then given all those investments, what do you think the yield on cost for that would be?
It's totally impossible to say, because I mean, we are right now refurbishing the roof, for example. That's not very costly, so to say, and then internally we will have to do some modernization when it comes to ventilation and sprinkler systems and such. But then how cost driving it will be, it depends on tenant improvements, i.e. explicit request from the tenant. But that's just a good thing, because if there are explicit requests from the tenants, then they will pay for it. So it's super dependent on the tenants. I cannot say, but when we run the numbers, what we've been working a lot with is how to divide it, because that initially was quite cost driving. But the more we work with it and massaged, the product, then it's sort of the exponential effect of dividing. It becomes flatter and flatter. So now I think the best alternative when it comes to the economics is actually to divide it into several subsections, and that's a profitable number crunching. But then I will not give you any figures more than that.
Oh, that's okay. That's okay. Keep us curious a little bit. So you tend to prioritize on developments. You tend to prioritize pre-let developments, but you've also made a few speculative bets in order to be able to serve tenants with more square meters when they want to upsize, for example. Do you think, given the current climate, that you'll be continuing to do those kind of speculative bets, or how is your thinking on that in the future?
Well, I think that is really the million-dollar question, because there are, if you look back a couple of years, there was basically no speculative build in the Stockholm area. And then over the last couple of years, roughly 1/3 has been speculative build. And that has led to some, historically vacancy has been close to zero in modern logistics in the Stockholm region, whereas now in some areas there's almost, it's 5%. But real estate is by, that's about location. And that also means that it's kind of local business. So even though there is a lot of capacity coming into the market on a speculative basis in northwest of the greater Stockholm region, that has very little to do with southwest of Stockholm. That has very little to do with the situation in south of Stockholm. So it's I know that there are markets where there's appetite, but it's also a question of, is there an overhang from speculative build? It's also a question of that we almost tend to forget about execution risk. One thing is market risk when you take it to the tenant, but execution risk when it comes to project has become, let's say, more important since there are construction companies having problems. So, I'm hesitant to do any speculative build. But what we did start on a speculative basis is 6,300 square meters in northwest of Stockholm, in Brunna. That is fully let. And the other property we built on a speculative basis in south of Stockholm, closest to Södertälje, 11,900 square meters. That is also now fully let. So, but the logistics assets that we started on a spepulative basis are fully let.
And so, what is the occupancy rate for your ongoing projects?
Well, the depends on with the ongoing project. The ones that we recently completed, I think that's 30,000 square meters. That's fully let now. Then we have ongoings. That can be anything from that we are actually building pre-let, but in some cases we are working on rezoning from industrial use into residential use. It's an ongoing project, but you can the concept of it being let doesn't exist there because of rezoning. So that I cannot really tell you. Yeah.
But and so obviously one of the big ticket items on your development list is Green Hub. Are we getting any sense of how that is progressing in terms of occupancy at the moment?
Well, Green Hub is the Coop property, the 130,000 square meters, is a part of the Green Hub area. And the Green Hub area consists of 400,000 square meters of building rights in an area of 1.4 million square meters in total. And this is, again, 25 minutes car drive from Stockholm. So we have not yet erected any buildings there, but we do have obtained building permits, but we have not started to build. But we have obtained building permits for industrial assets in Green Hub, in addition to the Coop building. But we've not started to build, and it's not been let yet. But we obtained that building permit just, what was it, 3-4 weeks ago.
Okay, okay. So very good. Starting to, or you recently you postponed quite a bit because you've got some residential assets as well, and that's part of your business idea to be able to own land or properties in areas that could be converted to residential areas in the future. Recently, you postponed quite a big development in Botkyrka. What's the latest on that development?
Well, for the audience then, we started rezoning process a number of years ago on a property in Botkyrka where we had basically one erected building, and the area that we rezoned was not used. Well, it was a parking lot partly, so we're not turning an income generating industrial asset into something else. So it was basically empty land, and we rezoned that and got a rezoning for up to 800 apartments. We also applied for a building permit 1.5 years ago, I think it was, or we got a building permit for 300 out of those 800. I think it was a year ago, slightly more. But right now the economics doesn't work, and when will the economics work? It depends on the interest rates and rent levels. Obviously, in the residential sector, there has not been the inflation-adjusted rent uplift. It's a total other game there. So when that is when that makes sense economically, difficult to say. But I think the important thing is that we have not in any way cannibalized on what was an income-generating asset, which we then converted. But this was empty land before, basically.
So, understood. But could it potentially be relevant to sell that on to someone else, freeing up capital to deleverage or buy new standing assets instead? Do you think?
I mean, in the communicator strategy and how we see is that because we have a handful of those sort of land plots where we have potential to convert into rental. That is a sustainable, recurring opportunity within the portfolio. Hence, we want to build a business around it to actually rezone and to develop and erect buildings and actually let to and continue to own to private individuals. But again, with the first income, because we don't have any residential as of now, just basically the building permit of those 300 apartments. I mean, the time from now until we get the first rent paid from private individual paying for a residential apartment, that will take time. So, and we are, as I said earlier, we are businessmen and businesswomen. So obviously we could opportunistically sell it, but that is not in accordance with the underlying strategy.
No, and that's why I asked the question, because obviously you could see a bit of, potentially looking outside in, a bit of read across from that situation to your other potential assets within the residential development as well. Is that fair, do you think? Or
come again?
Is there any potential read across from the situation in Botkyrka to your other potential residential developments as well? Or do you think you'll start residential developments somewhere else other than Botkyrka before Botkyrka?
No, I mean, let's say we are in Sollentuna, for example, running a rezoning right now, and I mean, potentially it could happen before, but rezonings tend to take time. So whatever will come first of those, difficult to say. And then we are in a few other discussions. There's a very beautiful area of 110,000 square meters in the southern part of Stockholm, in the proximity. You actually see Drevviken in the south from that land plot, where we have received in Swedish positivt planbesked, a positive signal from the municipality to start a rezoning, to potentially start a rezoning. So, but that will take time.
So, starting to summarize and closing off here, at the top we mentioned that Stendörren is still very focused on the Stockholm region, but you have started to make a few acquisitions outside of Sweden, in Helsinki, Oslo, and Copenhagen. As you grow, and as your presence in the Swedish and the Stockholm market starts to saturate, and does that make you have to move outside of Sweden? And secondly, how does that change Stendörren a few years out, I mean, as a company?
We have been very disciplined and very unopportunistic when it comes to buying properties. We want to have properties in growing macro and in urban micro. And as it was very competitive out there a couple of years ago, we basically look for the same growing macro, urban micro in other regions. So we bought a few properties in west of Sweden, but also in Gothenburg. We also bought in Oslo, Copenhagen, and in Helsinki. We have only reached a fairly small scale, not yet critical mass, but I think it makes sense to. What we want to do is to prioritize building a critical mass where we have now sort of entered the market. What we have bought is fully let properties with long leases. So they are management light in the sense, which means that we are in no hurry to build a critical mass, but we would like to prioritize the new markets.
Any specific market out of those 3 or 4 that we've mentioned?
No, well, it depends on where we find the next deal. Basically, if we find a good deal that makes sense in any of those, then we will prioritize a particular deal.
And no telling where the deal climate is looking especially attractive at the moment.
Well, you can talk about the deal climate. You can also talk about the currency right now, and obviously the DKK and euro is fairly expensive right now, which would point us obviously to Oslo, I guess. But again, depends on the next deal.
So with that more international outlook, we'll have a few international viewers, I think, and in the international discussion, Sweden's got quite a bad rep at the moment, and the Swedish property sector especially. What do you think, because as you mentioned, the operations are pretty well, we're doing pretty well still. What would your message be to international investors looking at the Swedish real estate sector at the moment?
Well, coming back to, perhaps I shouldn't mention the Lehman crisis because that's nothing that I would like to compare with, but I nonetheless I do that. In the sense that the financial system actually works. When I was a banker in those days, there was this topic of the wall of refinancings that would basically, the refinances could not be handled. At the very end, the financial system worked, and I think if you look at the maturities, I know there are a number of, in the high yield real estate segment, maturities coming up now in September. And if you look at what the respective companies say, they have taken care of the refinancing risk. So I think there is a capacity within the companies to operationally, they function or perform very well to increase cash flow because it's ultimately inflation adjusted. I mean, The bank system work and realize that they are a part of it in a way, and as long as the companies perform well, they are willing to support the clients, and what has not been repaid has been refinanced at, let's say, a high price. But I mean, the capital market is like that. It goes up and down. So yeah, I think I at least trust the Swedish real estate sector and the Swedish financial markets.
So one final question then to summarize our conversation. As you're looking at Stendörren now and a few years out, what are you most excited about?
Well, there's a lot of things that I'm very proud of. I'm very proud of that we had, gone from 13-14% vacancy to 5%. When I started, we are now working a lot more thoroughly when really going through each and every lease which is coming up for renegotiation, how we shall get to the capitalize on the reversionary potential in the leases to get the 20-25% uplift in renegotiated leases. I'm very proud of the fact that when I started, we basically had no ongoing projects and had completed basically nothing over a number of years, and we completed now this half year 30,000 square meters, and we still have 50,000 square meters as ongoing project. And what we have built on a speculative basis, it has been let. So and I think the resilience, a little bit coming back to what I should answer the international investors. We did let the final sort of vacant area. We did let one just before the summer, 11,900 square meters, and just now during the summer or after the summer, some 3,000 square meters which made the property in Brunna, 6,300 square meters, fully let. So we managed actually to do this in a market where people feel that there may be decreasing sort of appetite and demand, but it still is appetite and demand.
That's very good. Very good to hear. Erik Ranja, CEO of Stendörren, thank you very much.
Thank you very much.
Thank you.